Super niche investment vehicles you might not have heard of. 1. Tax liens and tax deeds. Tax lien and tax deed investing is an under-the-radar, yet highly lucrative form of real estate investing. It involves purchasing the rights to unpaid property taxes from the government. Here's how it works. Tax liens. When property owners fail to pay their taxes, the local government places a lien on their property. As an investor, you can buy these liens at auction. If the property owner pays the tax debt, you earn interest. If they don't, you may have the right to foreclose on the property. Tax deeds. In some states, the government sells the actual property at auction for unpaid taxes. Investors can purchase a property outright for a fraction of its market value, providing potential for substantial returns once the property is resold or rented. Tax lien investing can yield high returns, often between 8 to 36%. But there are risks, such as a possibility of no payment from the owner or inheriting troublesome properties. Make sure to do in-depth research on local laws and property values before diving in. 2. Litigation financing. Litigation financing is a unique and emerging asset class where investors fund legal cases in exchange for a percentage of the settlement or judgment. Here's a breakdown. How it works. You invest in a lawsuit, often commercial or personal injury cases, by financing legal fees and expenses. If the case wins, you receive a portion of the settlement or judgment as your return. If the case loses, your investment may be lost, though some platforms allow you to spread risk across multiple cases. Why it's niche. Unlike traditional stocks or bonds, litigation financing is a relatively illiquid asset and often involves high stakes. However, investors can earn impressive returns, sometimes 20 to 40%, if they pick the right cases. Platforms like LexShares, Burford Capital, and Precedent allow individual investors to get involved in this space, opening up opportunities for alternative wealth building. 3. Mobile home park investing. Mobile home parks offer a unique niche in real estate investing. Unlike traditional housing, mobile home parks can be less capital intensive and more resilient to economic downturns. Here's why. Revenue streams. Many mobile home parks don't own the homes, but instead lease the land to tenants who own their homes. This creates consistent cash flow with lower maintenance costs compared to traditional rental properties. Appreciation potential. As demand for affordable housing increases, mobile home parks become even more valuable. Investors can profit by acquiring parks in high-demand areas, collecting rent from the land, and potentially selling the land for a profit in the future. Platforms like Realtor.Mogul and Fundrise have mobile home park investment opportunities available for small investors. 4. Timberland and forest land investing. Timberland, the practice of investing in forested land, is an ancient yet overlooked asset class that provides consistent income and capital appreciation. Here's why it's super niche. Long-term growth. Timberland provides two income streams: revenue from timber harvesting and land appreciation. Timber grows in value over time, so investors with a long-term mindset can profit by selling timber or the land itself years down the road. Inflation hedge. Timber is considered a natural hedge against inflation because timber prices tend to increase with inflationary pressures, making it a great option for preserving wealth. Timberland investing is less volatile than traditional real estate, but it requires a solid understanding of forest management and the timber market. Platforms like TimberVest and AcreTrader allow you to invest in timberland without having to manage it yourself. 5. Aircraft leasing. Aircraft leasing is a highly specialized and under-discussed form of alternative investing. As a niche within the aviation sector, it involves purchasing aircraft and leasing them to airlines or cargo companies. Here's why it stands out. Long-term contracts. Airlines sign long-term leasing contracts for aircraft, creating steady revenue streams for investors. These contracts can span several years, offering predictable returns. Depreciation benefits. Aircraft depreciate over time, but they also have a high resale value, particularly for well-maintained planes. Investors can sell the aircraft once the lease ends and recoup capital appreciation. However, this type of investment is not for everyone. You need to understand the aviation industry, the cost of maintenance, and the financial stability of the airlines you're working with. 6. Venture debt. While venture capital often gets attention, venture debt is a super niche investment option that is less frequently discussed. Venture debt is debt financing provided to venture-backed companies that may not yet be profitable but have significant growth potential. How it works. Investors provide loans to these companies in exchange for interest payments and warrants, the right to buy equity in the future at a set price. If the company succeeds, you can see significant returns from both the interest and equity appreciation. Why it's niche. Venture debt offers a different risk-reward profile than traditional equity-based venture capital investing. It's typically used by companies that have already secured venture capital funding but need extra cash to grow. Venture debt isn't for every investor, as it involves assessing the financial health of early-stage companies and understanding market dynamics. Platforms like Lighter Capital and Capital Stack provide access to these types of investments. 7. Domain name investing. If you're familiar with website development, you might have already encountered domain name flipping. This involves buying undervalued domain names and selling them at a profit. Here's why it's a unique niche. Buying low, selling high. Some domain names, especially short, catchy, or keyword-rich ones, can increase in value as internet trends evolve. Domains can sell for anywhere from a few hundred to several $1,000,000, depending on their appeal. Revenue streams. Domain names can be leased out or developed into websites to generate income, and then later sold at a higher price. If you're strategic about your domain purchases, you can build a profitable portfolio over time. Sites like Flipper and GoDaddy Auctions offer marketplaces to buy and sell domain names. 8. Crowd-owned startups, equity crowdfunding. While crowdfunding for donations is widely known, equity crowdfunding allows everyday investors to buy equity in startup companies before they go public. This opens the door to early-stage investments in exciting and disruptive companies. Here's why it's niche. Early access. As an investor, you can get in on the ground floor of new companies that might have explosive growth potential. In exchange for your investment, you receive equity in the company, with potential for significant returns when the company exits via acquisition or IPO. Risk versus reward. Startup investments come with a high risk of failure, but they also offer potential for high returns. Successful companies often provide substantial returns for early investors, especially in tech, biotech, and sustainable energy sectors. Platforms like WeFunder, Start Engine, and Seed Invest allow you to invest small amounts in startups you believe have the potential to change the world.